So there was a 10.9 million barrel build in gasoline inventories in the States, which is absolutely huge and the largest in 30 years. So, of course, one could assume this would be naturally a really massive bearish driver. But the fact that there is such a low inventory for crude but such a high inventory for products is a bit of a tax, what word should I use? A tax get around, Vince? Loophole.
Actually, so if we look at the chart here, so yes, it was the largest build in 30 years.
I was talking to the trader the day of this happening, and he was saying that in the RBOB market and therefore like impacting the EBOB market at the time, there was loads of macro money. The massive reaction was the kind of macro money seeing the headline rather than reading into like the minutiae of the market and then leaving their positions. He said you could tell it was macro money because it wasn't very responsive to anything. It wasn't very responsive to like weak underlying fundamentals. We've seen rubber like higher than it like quote unquote should be. So you can see this huge drop off in rubber from the 4th onwards as the stats were released and the macro money ran. So yeah, that was interesting. It's interesting to see the impact of what the market's made up of.